Asian equities traded mixed as caution gripped investors. This in a week where the US Fed Reserve is going to make a call on interest rates. The expectation is that they will raise the rate by 25 basis points. Keenly, markets will be looking to hear whether the Fed will raise rates more than previously expected. In Japan, yen's strength against a number of major currencies remained a bugbear, with exporter counters negatively affected as a result. While Premier Shinzo Abe's political future hung in the balance, the Nikkei share average dropped by 0.9%. Hong Kong stocks finished up marginally higher. CK Hutchinson Holdings fell more than 2% after their chairman, Li Ka-shing, the city's richest man, indicated that he would be stepping down. The Hang Seng Index closed up 0.04%. China bucked the trend with stocks up marginally higher. This as the ruling party elected a new economic team. The Shanghai Composite Index rose by 0.3%. US stocks closed up on Friday, boosted by positive industrial output numbers. However, for the week, all three major indexes posted losses. Factors including President Donald Trump's firing of key staff, as well as the jitters around the possibility of trade wars, continue to occupy investors' minds. The Dow Jones Industrial Average rose 0.29%. The S&P 500 gained 0.16%, while the Nasdaq Composite Index added 0.25%. For more on the markets, we crossed to Nompumelelo Siziba. She's standing by at the Johannesburg Stock Exchange. Good afternoon, Nompumelelo. All eyes on the US Fed this week.
That's right, Nzinga. All eyes definitely on there. It seems as though investors are looking at nothing else but that, despite all the headwinds that you cited in your introduction there. So, as you mentioned, the Fed Reserve is expected to raise rates by 25 basis points this month. But I think what investors are keenly looking at is what they say in terms of their prognosis for interest rates. So, in December, they indicated that they would raise rates 3 times this year. But with good data coming out of the United States, market players beginning to think that perhaps the Fed may announce that it's going to raise rates 4 times this year. And if that's the case, it means that people have to readjust the way they invest, because it's likely to mean a stronger dollar, stronger bond yields, and so on. And so they will have to shift how they invest, and equities may suffer as a result. So people watching that very closely. In terms of our local market, we see the all-share index in the red, and European markets also in the red. I think there are a lot of concerns, not just around the interest rate issue, but, trade wars. We have the G20 meeting today in Argentina. And of course, the big question is, will that discussion be overshadowed by trade tension between the United States and China? So that's going to be happening. Of course, here locally, on the local front, we have quite key data coming out. We've got February's inflation, and we're going to get information on our current account deficit. That's expected to actually narrow to about 2% for the fourth quarter of last year, which is positive and should actually be rand positive. But on a negative front, we see that the local currency is actually trading above 12 against the US dollar. Let's take a look at the indicators. Well, I'm joined by Gary Booysen. He's from Rand Swiss. Thanks for joining us, Gary.
Thanks for having me.
Great stuff. In my laywoman terms, I've tried to break down the issues around the Fed. Please give us your expert analysis.
No, I think you did an excellent job. So it's, I think, as you said, the rate hike this week is largely priced in. Everyone's looking for a 25 basis point hike, and it looks like those three rate hikes are pretty much a done deal. It's really going to be this is Jerome Powell, the new Fed chair's first meeting, and it's going to really be the tone that he strikes afterwards. Whether we're going to get 4 rate hikes this year, whether we're going going to get one in December. Currently, if you look at where the market is pricing it, they're pricing it at about a 33% chance that we will actually get 4 rate hikes this year, and that obviously has all sorts of impacts on the price of capital in the US versus the rest of the world, and exchange rates, financial markets, etc. Now, I think that the real concern is that unemployment in the US is pretty much at what we call a frictional level, which means the people that are unemployed are essentially unemployed because they're looking for a new job, or they're between jobs, and it'll be very temporary. But what we haven't seen yet is a real spike in inflation, and at the moment we're seeing it move towards the Fed's target, which is 2%, but it's not quite there yet. So I mean, people may be a little bit hoping for, I think, a dovish statement. At the same time, we've got to consider what Donald Trump has done in terms of the fiscal stimulus, in terms of tax cuts and spending hikes. So I think that's certainly going to weigh on the Fed's mind as well. And I think maybe market participants starting to position for a slightly more hawkish tone, which means a stronger dollar, which we should see the rand weaken against the dollar on the back of that.
That will be adverse for us for emerging markets in general. So what then would happen if that's the case?
Yeah, so again, we see the initial movement through the currency. So I think this is part of the reason that we're seeing the currency moving above that 12 rand to the dollar level. But it's certainly not the only reason, because if you compare, to the rand dollar exchange rate, at least the rand against the pound and the euro as well, we're seeing it weaken against most developed market currencies. So part of that will be the dynamic, as you say, between emerging markets and developed markets. But I think part of it is also perhaps the concerns around Moody's announcement later in the week as well.
Indeed, we'll come to that shortly. I just want to touch on Bitcoin. I haven't spoken about it in a while. It had a bit of a sell-off over the weekend, but it's since propped up its price. It's above 8,200 at the moment. Presumably at the G20 today, that's going to be top of mind for officials there.
I believe they're going to have a closed-door session, so we're not going to hear what they're talking about. But certainly, I think it's a very disruptive technology, and I don't know whether it's Bitcoin itself. So, I mean, if you look at Bitcoin, many market participants, you've got the likes of the major investment banks and retail banks as well coming out and saying this is a bubble. Bitcoin itself, cannot be sustained at these prices, and I think I agree with that, because part of it is, the scarcity around Bitcoin doesn't really exist, because you can always create an Ethereum, Vertcoin. There's all the other coins that you can create. So I think the discussion is probably going to be more around the underlying technology, which is that blockchain technology, which I think is very exciting, and certainly how to regulate it is going to affect the price of the coins and that kind of actual Bitcoin value. But again, it was a very, very volatile weekend for Bitcoin, and part of that was because of the Facebook, Google, Twitter announcing that they could potentially ban cryptocurrency advertising, and because the crypto market is very much a retail-driven market, this is not an institutional market. These are average people trading it. That could have a significant effect on the demand that's been created. So very, very, very choppy, and still not I suppose for us a true investment asset, a trading asset, a bit of speculation, but not something that we'd be putting pension fund money into.
Don't you dare. And then locally, you touched on it, Moody's. We're expecting that decision later this week. They're usually supposed to come out on a Friday, but they usually tell us what's happening on a Saturday morning, which doesn't help. They have South Africa on investment grade at the moment. They put us down for review for downgrade. But do you think that with everything that's happened in the recent couple of months, do you think that we're going to avoid it?
I think the general expectation for the market is that we're going to remain in investment grade in Moody's eyes, but it does have that negative outlook, which means the next move, with a negative outlook, the next move should be worse. As you said, that change in status really came from October last year, and a lot has changed since then. Obviously, we've got the new administration coming in. We've seen a strengthening of the institutions with the reshuffle of certain ministerial positions as well. And then at the same time, there are still real concerns. So we do have obviously still very, very serious concerns around the state-owned entities. We still have structural problems that are going to not allow us to grow at the rate that perhaps would mean that we deserve an investment grade. But certainly I think the improvement that we've seen in business confidence, and we've seen estimates that just the improvement in business confidence could potentially add about 1% to GDP. I think this is going to give us a stay of execution. I think we seem to, from an investment point of view, from an economic point of view, have turned the corner. We've slowed the decline, and I think that's positive, and I think Moody's will pick up on that. And certainly I think this land reform message that we're hearing so prevalently in the media, I think that will probably make it into the Moody's statement. But at this stage, I don't think it's quite vocal enough for it to actually trigger a downgrade. So I think for now, my view would be that we are safe and that we've got a little bit more breathing room, but certainly we have to see a continuation of the improvements that we've seen over the last 3-4 months.
Of course, these ratings agencies, they look at us every 6 months, don't they? Or at least they tell us what they're thinking about us. So 6 months is not really a very long time. And we have Fitch and S&P in June. They're going to make a pronouncement on us then. Do you think it's a little bit, we're jumping the gun a bit to think that they might revise the outlook towards a better outlook?
Potentially. As far as I know, they're both unstable at the moment. So, to see a revision of outlook, potentially to see, us being moved back into investment grade by Fitch or S&P, I don't think that's very likely. Generally, it's a much longer period that they would take to re-establish something like that. As I said, we've kind of slowed the decline, but we're not climbing just yet. Again, as you said, they review us every 6 months, but they can also make an announcement at any time, given certain extraneous situation or events. So, I mean, we're expecting it on the 23rd, but it can happen before that. Generally, it will be after markets are closed, so that people have time to digest it.
Indeed. All right. Well, thank you very much for your time. As always, Gary Booysen, Portfolio Manager at Rand Swiss. After a short break, and Zinga with more business news for you.